I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is October 17, Tuesday, 2023. So we've had a kind of indecisive day, but it's generally more on the bullish side. We did say that the price would retrace from yesterday. I don't know if I did a good job of explaining it here in this area. I did mention that we could bounce right here from this old weekly gap 2 weeks ago, but also I'm pretty sure I mentioned this area here. There's an imbalance on the 4-hour. We dipped in, all right, and we constantly sold off. Let me show you this. When I was showing this on the video, now I think I skipped past this, but in my mind I remember this area, but and then we would come down and then buy right back up. Let me see. Does it show? I think if I played it, and then I did like this area for these down candles right here. And then I left that there and went up. So the goal was to take out that high, pretty much for today in general. Let's go back to the videos here. So, and then they did that. So with the range here, and I think I slipped that too to mention that. So watch yesterday's video so this all makes sense. But we did retrace nicely from this higher low to higher high. I'm not sure. I don't think I put the fib though, and I should have. But we did retrace nice to a 50 there. Beautiful. And then we bought up, took out that high, immediately sold back down. So that's what makes it the indecisive day for me, but we end up closing here. So not nice. And then yesterday, I think I also forgot to mention, hey, you would think with a 30-minute video I would mention everything, but it's hard to remember everything. It's crazy. But you see how we look on this weekly chart, and you see this fib here, retracement. And then I mentioned us coming to that 50 level as well. We actually did that. Did we do that yesterday? And I didn't mention it. I think maybe we tapped it yesterday, but barely. Let me see the low. Well, no, I'm not going to do all that right now. But the whole point was, this range that we got here with this fib here, we're basically, and it's sort of like a consolidation, right? I was mentioning dollar. Let me, if I could just jump to dollar. I was mentioning that we would retrace back into this imbalance right here, possibly. That would push us up, right? And you see here, right here, this is where we peak out and we start selling off in dollar. That's pushing us up. And then for us retracing after taking our high out, we retraced here in dollar and shot up, right? So, what do you call it? So yeah, and we're here. So, even if we expect the big movement that I was showing, you're not going to get it all in one day sometimes. So that's the thing you're battling, right? Let me go into a smaller time frame. It's a 5-minute here. And as you see, we open up and we never touch the open again. We literally keep coming down, lower low, lower highs. 8:30 news is here, and this candle coming down, and we come down to take out liquidity from yesterday. So if I just move over, you'll see that where we bought yesterday, that's why you got to watch yesterday's video so it makes sense. They came to take out anybody in the AM session from buying yesterday, right? Because we closed up here, okay? So, and then on top of that, we open at the 9:30 here. So we have already all this price action in the opening range missing from yesterday. So, that being said, we are, ask yourself who made money last? Well, they came down and brushed the price already, so we took them out. And then we came down and we came and stayed into these last two down candles. See these last two down candles right here? Generally, it's this one I'm looking at right here, this last down candle. But you'll see that it pops into the wick very slightly, and it's a 5-minute. On the 15, if I scrunch this up, you can see we came down right there. And look where we come in. We stay right inside that last 15-minute candle as well. You can see the confluence there. And we have the 50 level on the fib. So we retraced, if I scrunch this up just a little bit so you can see it. Don't get lost in all this. This is the lower high that we made. So range from here to here, we identified it, retraced. came below a 79 here, and then this is just a manipulative range. So this leg up, and then retracement down, leg down, then a retracement, leg up. See that? See how it's constantly higher lows by when I squinch it out like that? Well, we came here. We have a when we broke a new high yesterday, we did reach that weekly gap, right? That old weekly gap that I've been mentioning for a while now. That level, see that? And we're inside that candle right there, right? Today we pretty much took it out by some points, but the idea is that when this came down and then retraced back up, so this was kind of like your lower low, lower high leg coming down all the way. So you have your range from here to here, right? Understanding that, and then your retracement is Asia London is selling into the retracement leg, and then setting it up for us in New York to buy that new leg that we're going to create, right? So pretty smooth day, actually pretty simple if you kept it simple, and then lower targets, they didn't rush it down more. So we have to ask ourselves at 9:30, if you were thinking it to hit here, I did think to wait here or a little lower, but at the same time, the reason why you don't do that is because you have the understanding of time is involved. Now the New York session is going to open, and we're here. It's not like, we were already down here to be different, but we were kind of here already. 8:30 has already brought the price down from the news. Nothing spectacular or anything like that, but and then we are at the 25% level, also kind of holding in there. And then the other confluence was that was it with this 50 level. This is what really was more important to me than everything else on the screen, even though that's debatable too, but I won't get into that. But for me, the range of the 50 level was great because it's also at 9:30. So if you want to take this buy right here, that'd be great. If you wanted to wait for the first 30 minutes to range and show you its hand pretty much and show some direction, then that would have been better. But this was a beautiful buy right here. Price now takes a shift above previous lower high. So you have a shift in structure here. Price then retraces right back down. Let me see if you can see this right on a 5-minute. So fake high right here, right? So common pattern is, we'll shift structure, but you'll get like two highs. You'll get a higher high and a higher high, right? And then the higher low that made the final higher high, they'll take that out. They'll come down and wipe people out from buying. And then this is the real entry for this trade, which is on a 5-minute. I'm just showing you on a 5-minute. Obviously, you're in this imbalance right here from this low to that high. But then you also have these 3 down candles here, right? 1, 2, 3. See that? And then this is acting as your support and first a breaker restructure and a retrace back into a support for a new higher low. If you can see on the fib here, it comes right to a 70. A lot of high confluence here. And then also you have an inversion imbalance here. If you were to draw this out, you'll see that we get right in there. And where are you? You'll see that we come right in there, and then that's also a nice buy with the confluence of that candle here. And then on a 1-minute, it's a little bit different. I'm just going to show you the general gist. And then from higher high to higher low, you're going to make a new higher high. Shit pops up, retraces back into its own fib, does come to a 70 again. 70 on fire today, pretty much. And then makes a new range, little range from here, retraces at the 50. This is another entry right here. These are all entries, these lower highs right here. Where are you taking it? Well, you have a couple places as a minimum target. My main target would have been that high. I don't care if it busting all the way through. Not in the, I'm not trying to hold on the times that we're in anything. I don't trade. We might not get the movement that we want in today's price action. So that's why as a day trader, you're taking profit. Okay, where are you taking it? Well, here would be a good place here because it does pop up here and it's struggling, but that would be a level. Next place would be the actual opening of the day gap today. And then, by the way, this was coupled with that 25%. And then, also coming to this level here, which would have been the high of the weekly imbalance that we've got here, right? And then that high is generally more important than any of these in general. If you're holding for more of the range of the daily range, This is opening up, and this is accumulating sellers, right, coming down, and then the manipulation happens in London, as it brings it more down here, and then now New York is the distribution and takes off for the new higher high. So we break above this high, we get above that gap. If you wanted to take it to this gap, that's a minimum as well. So anywhere here, if you wanted to take it a little bit above, you would have, you could use 3 drives up here. You could have now, once you reach up here, beautiful day though, if you reached up here, you could have sold on that bull candle. I know a lot of people don't understand how to trade like that, but that's one way to do it. You have a high chance of it succeeding in a sell after taking a new high. Not so much these wicks, but you do have a 3 drive pattern, plus it's a nice closed candle above. It closed by its high. So then it takes off. So, taking the profit from here to here, any one of these, pick your poison, any one of these would have worked. And then, what do you call it? Once you get above this high, you got a new range here from here to here. So we're using these, again, as you know, we're using these higher highs and higher lows in this main leg that we're trying to develop for the real range that we're developing, which is from here to here. See that? So here we're already in this range, and you got to understand where you are, because if you knew you were here, right, you would understand that this is that main higher low you're about to build. You're going to buy up for the new higher high. So once we understand that, and once we take out that high, it's a new range. So once we came up here, price does retrace here, and then it starts to sell from here, and then you could have gotten in numerous ways. Let me show you the different ways. And this is only a 5 minute. So on a 5 minute, if you were doing that, you could have pushed it right there, literally when that candle closed. If not, this candle is going down. You could have got in right at the half mark of this candle. Just a confidence trade. This is just a strategy that experienced traders understand. New traders obviously wouldn't be able to do this. They don't have enough experience. But this candle closes below. You could have put a stop loss at the half mark of there. If you missed that, you could have entered on the closed candle itself. See that? See how there's no retracements after these candles are getting strong down. They're pushing down. They close, and then the next candle opens and pushes down. And then once it closes, it never retraces. It just continues this next candle to push down, and you could have entered that way. Now, if you missed all that, right, then you have a resistance here. After we have a sort of support here, busting up to make a new high, it breaks below, then it retraces back where? Well, you have that imbalance right there. This is just a 5 minute. So I'm not even showing you a 1 minute or even seconds chart. So bust in there, right, and hits that low. So closes that gap right there. Plus it gets into this candle, these 2 candles here. See that? These last 2 up candles. And that's also some confluence. Plus you have these down candles right here. These last 3. Once it breaks below and comes back up, that's a resistance blocks right here. And then you can use that as resistance as well. What's the open of this candle? Open is 242, and the high of this candle is 241. So it misses it by a point at the open right here. But you're generally going to be kind of pushing that button anyway. Once you're coming down here, if you didn't, then the retracement back inside to anywhere inside this candle. You could have used 50% of it, the low of it, of the open. If you had a limit order on the open, you would have missed it, obviously. But, closing inside this imbalance with your stop loss above that candle, I would have liked to not see it come above that candle right there, right? In general. And this is just a 5 minute. And where are you taking this trade? Your minimum idea is to get the range that we created here. I like to come to 50% as a minimum. And then there's some liquidity sitting right there. And then these down blocks might hold as support. So you never know. It could have bought up from here. But take a look. Pick your poison. You could have picked any one of these targets. You could have picked the open. If you sold from here, you could have picked the open of the actual day. You could have picked the 50 level on this fib. All right. You could have picked that long July 10th low that we've extended out. Look at that. Look how we you remember this low, this July 10th I keep bringing up every day. Well, I don't use it too much, but I'm just showing you that it's just this green line. Let me see if I can blow it up a little bit bigger. I'm gonna make it really fat. See that? That's that low. That's that major low. We've been tapping up and down. So we you know there it is the algorithm is referencing that low. It's not like it's not. But you see we go up underneath it and then we come above it and then we come back to it. Um, you'll see here that we do react right there. I mean, I'm not using this solely for the purpose of this trade. Just saying that these are ideas that you can use. You again pick your poison. Pick any one of these. And this price came all the way down. 50 is a minimum. Right there is good. And if you wanted to go to 61 or any one of these, that's fine. You could have used any of this liquidity that you wanted to wipe out. And then it did come and snapped at 88. And 88 is a lot of people ask me, it's pretty deep. I don't really use it a lot. I don't use it a lot. But once in a blue moon, 1 out of 5 trades or whatever the number is, you'll see the 88 work. And those are definitely for deeper retracements. Actually, this liquidity below here is in question as far as we could be getting a speaker right now where if you look on the 15, we had a high, we had a low. We had a high, we had a low. See how it's coming out? See how it's coming out that way and coming out up that way? See that? So they're just shaking out, but still at the same time, we could still just be bullish from here. Again, I'm short-term bullish, I mentioned yesterday, meaning I'm still looking for higher highs to be made, right? Where do we go from here? I'll get into that in a second, but the point of what I'm saying is that if you understood that it's possible that we can come down and wipe that liquidity and then actually come to the area that I was mentioning, which would have been nice to tap this gap, but it doesn't have to, this all week gap. So it doesn't have to. We can still be in this range if I was to increase this. Whoops. If I was to increase this fib, since we only came to a 50, this could be really the case. We could have just came up one more time, and I'm still using this low, and now we're retracing. Okay, and look at where it comes to. Oh, it comes right to a 50 exactly. Look at this level right there. This level right here, see that? So if I move this fib, because the reason why you move that fib to the, you can extend it and still use it as a retracement to the 50 is because we want to wait till we generally buy from a 61 or lower. So they want to give you a discount price. Coming to a 50 isn't a discount price, but it does come, if I put it back. When we came from here to here, it comes to a 50 and just a little bit lower. So technically that is a discount, and you can buy that, which is where it was nicely a buy. But here's the thing. Understanding the way this market works and the way you use your fib. The only reason why I'm successful most of the case is because I can identify the ranges, right? Or a potential range. So the thing is when you bring this up, I did it again. When you bring this up, I want to hurry up and be done. All right, so when this reaches here, I'm looking for a higher low, higher high, and a higher low anyway. Again, I don't need to be exactly right. I don't need to catch all of this move. But the point is that when I'm taking the sell here, I'm taking it to the 50 of this range at the least. And then if I have another idea, which is using this range from here to now here, because this is a high, they manipulate, right? And they like to engineer liquidity so they can take it later. But when I put this level here, this price, now you can have a different set of ideas where I want to take this all the way down to this 50, right? What else do you have with that 50 if I was to use this idea? Well, I mean, I don't have to use that idea. There's multiple confluences going on. Look how the price came all the way back down to this 25% level of the actual weekly imbalance. Look at that. Nicely, right? Also, it's coming below the entry of where we bought. They set this buy up pretty nice. And look how we came right down to it. So you pick your poison when you're coming down and you're taking this trade and you're taking the profit out for this trade. Me, this is a minimum here. I feel safe taking it out. I don't need any more. I'm not fucking with these people. I'm not letting them get me in too involved, for example. And I'm not trying to make this too serious or anything, but I'm just keeping it real, right? Like you don't want to be too involved in the market, right? Overstaying your welcome. So, but the price, your goals are looking at liquidity here, who was buying in here. So again, when we came down here, we said, okay, we wiped these people out because they were buying. And then when we're here, where's the money? Who just made money? All these people selling. So we come up, we take them out, make a new higher high. When you're here, what are you thinking? Well, I want a retracement. Who's the ones that were just making money? The people who are buying. So easy flow, right? Don't make this complicating, but a lot of confluence here, and you're looking at this last 3 down candles on this. The 1 minute now. Oh, it's still a 5 minute. Damn. Look on this. Look on these last 3 candles right here. I remember when we took this buy here, and it's 10 o'clock by the way. So you let the 30-day, let the first 30 minutes do its thing. Comes into these last 3 down candles, and beautiful right here. Comes right into a play. Happens to smack the 88 with some more confluence. All this shit, man. It's all kind of adding up. And a good place to buy here. I'm not involved though. I don't want to be involved, but I only want to be involved with this right here, to be honest with you. But that being said, price does bounce, and it's a nice buy. Comes where? Comes right back up above the 50 here, and does not touch that candle. Nope. Almost. Let me go to 1 minute real quick so I can see if I could show a little bit more clarity, but not much needed. And let's see here. All we needed here was to tap this imbalance when the price. So this is a common pattern of so if you were like trying to buy this and you got screwed over when it came back on you, it's a common pattern. You have to understand to still keep the bias that you have, because what they do is they make this high, higher low, high, and you're like, okay, cool, we're buying. Now buying this from here to here is great. I mean, you could take that, no problem. But this one, generally the first one, you're not holding that one, right? If you're a bullish day, you're looking for structure and flow up. Well, you got to account for the fuckery of them creating this first higher low to get wiped out. So now you're confused about where the market's going. So first came up, came down, came up, and then price retraces back. Really all it did was set that as to engineer liquidity. But this was really the higher low, and this is a higher high. This is, yes, a higher high from here, but we want to be something more meaningful, which would be above here. And look how sneaky. I'm going to do this on purpose right now. They were sneaky about keeping that high. Look at that. Look where they brought this up. And then it doesn't break that high. So technically this is still a lower high, right? But this is just engineered liquidity here. So everyone sells from here. They take it up one more time. That's your real shift, technically. And then again, once this here to here is made, that's kind of like your range now. Because even if you were to drag this fib here, look at this. You see how it doesn't come to a fib? I mean, it doesn't come to a 50 right there. So super suspect, right? You should be allowing the first 30 minutes to go in anyway. You should be holding this to know, if you have experience, that you're making this big swing, and this low will be protected. But look for the retrace. It should be manipulative. Doesn't come to a 50. You extend this out, right? Kind of similar idea about what I'm talking about here with this situation of the price coming all the way back deep. Well, creating these higher lows. But right here, higher high, this is the higher low, retracing back, getting into that inversion and balance. Even I'm sure I could even, maybe not this time frame, but yeah, pretty good right there. All right, see how the price comes above and comes back. All right, and then you have this confluence here with the imbalance right there. So even if I deleted, I'm gonna move this over real quick. Well, no, I'll leave it there. Just to show you real quick, this imbalance here on the 1 minute. All it needed to do here was tap, and they didn't have any intentions on going deeper. And you can see how we tapped that there. All right, so now, and the fib, don't forget the fib right here. Let me move this over. That 70 levels right there. We tap right in there, and then this next candle, when it closes indecisive, this next candle right here, this bullish candle, dips into that wick. That's an entry for me. And then shoots off and then these next 2 candles hold price as they're going up. See how it never breaks these two candles. And then also again, when it taps underneath that, that's all I needed to do right there. See how it taps right into it and then it takes off. Well, higher high, and then you see your structure here. Pretty simple. And then let's see what else I want. If you waited for it to come back down here, then you are definitely asked out. So you don't need to do that. You have a shift here and then a retrace back. So hopefully this is making sense for you. But you want to take these trades and trust your analysis, understanding that we're making a new high here, and you want to hold this. The idea to hold this would have, if you were holding it for the rest of the day, as far as up until lunch, would have been nice, and that's what I did. Until we take that high out, it's 1150 here. Macro can do anything it wants on the algorithm, so I'm good. I don't need to be holding it or taking it out for any further. You know, it's lunchtime and be done. But yeah. So let me see, how long is this video? 25 minutes. Damn, dude. So anyways, yeah, I explained this sell too. And again, you could have gotten here earlier. It's a 1 minute, right? Yeah. So this gap right here stays unfilled. So that's strong confluence as well with us retracing or possible coming down. And then you see here shifts right there and retracing back into that imbalance. Takes above that high right there. It's hard to do this when this thing is in the way, man. Damn. So pretty much this last up candle, it breaks down and it holds price. See how it controls price right there? But breaking through here, you have a support like turn resistance, kind of basic fucking price action. And then pops back up. But you know, if you pushed it here in this candle, I wouldn't have been mad at you. Your stop loss got to be above this candle right here. This candle right here. And then also, well, I'm sorry, possibly this candle right here, but you could have used it at the open as well. You didn't expect it to break higher than these highs, these little highs right here, and then this candle, 50% of it, plenty of confluence there. It could have tapped that bottom of the gap right there, but it didn't need to. It was already strong for selling, and you can see no bodies closed above here, so this candle's in charge right here. And then again, lower low, lower high structure coming down. So that being said, real quick, we showed you dollar, and then as far as the confluences here, we had a crack in yesterday, by the way, before I get today. Yesterday we did have a crack. I think I forgot to mention this, but I remembered it. But we had a higher high here in NAS, and then we had lower highs here. So that was what's pushing us down. And then once we came down, NAS took out their lows. So so people who trade NAS, here's, you know, sometimes you get the fuckery too. So I mean, you know, no one's exempt from this. But we had higher lows here in S&P and higher lows for us in Dow. So this was the crack for us to come up. And then that was the buy there. And then also some extra confluence when for us, well, whoever was in their market here trading, we had a higher low here in Dow, and we had lower highs in NAS. So you can see that right there takes, and that pushes us up. So a funny thing is when it pushes us up, it takes out that high. Dow does it, S&P does it, but NAS does not. So again, if I was to put another line here, this is to show you that we had that retracement, and that was the crack and pushing us down. So funny shit, huh? So that being said, where are we tomorrow? Damn, I got to finish this. I don't know, man. This is, at this point, is getting a little suspect because we've got this liquidity sitting here. I'm even gonna draw this. I mean, that's a lot of liquidity. Just kind of. I don't want to make this chart nasty, man. But you know, we have some news this week here, and let me see if I can make this skinny. I'm just gonna do that. I have all these ranges and fibs here, so don't get lost in it. Technically, if I deleted, you know, this, I'm only doing it because I have to do a weekly a review at the end of the week, and I don't want to fucking draw it all and remember everything, so I just leave it on. But it is annoying to me. We got to be honest with you. Let me just do that real quick. That's honored. This fib is honored right here, and the whole goal was to break up and make that high, which we did yesterday. So this would be. We identified the range. I could just do, this is even debatable too. Does not hit that 50 there. No, does it? Let me see. Ooh, got real close though. Let me put that back though. So A lot of confluence with the projections of this fib here coming up to this level here. I don't know, are we going to hit this or not? At this point, look at the 4 hour. I was mentioning real suspect, but we're still making lower highs on the divergence, but we're never hitting the overbought area. So I think we're still bullish. They have came and accomplished everything they really need to do. But look, if you look on the monthly, there's this little space right there. See that little space right there? I feel like that's going to get hit. So with the news, I think we're still bullish here, and we're going to pop up, and we're trying to target most likely this area. Also, plus look at how we hit the 61. Look at this on this big range that I've been showing. Now we hit the 61 today as a high. So another purpose of why the price sold from there. You're like, well, why didn't it come up higher and sell? You know, so you don't know where it is. It is shallow. It's a shallow run above, and the price came all the way down on this 4 hour candle. But I still think there's strength on the top side for now. And then projections are all aligning with this green line that I got out, which is going to be the low of what is that low? That is the low of August. Why don't I have it on my daily chart? Yeah, I don't have it on my daily chart. Let me put that real quick. You see that low right there to the daily? That's that's August 25th, Friday, 2023 right there, right? So that's the purpose of this line dragged out. But I mean, this 61 is nice. I mean, to be honest with you, I mean, they could push it down anytime with all that liquidity. But I feel like there's one more. I think they'll do both, to be honest with you, obviously. But let me just give you the options for being bullish. So being bullish, I think it'll just go straight up again to it and then come down. And I don't know how far I'm going to do this. I'm just going to keep it like that for now. And that would be option 1 for being bullish. Option 2, I would say that you know, it is possible. Well, I don't believe in it. I don't think it'll come down at this point. I don't know. I don't think it'll come down and then come up. That's option 2 for me. You know, all right. If for bullish, and then for bearish, and you're asking, well, how are you both? I mean, I have to understand what both options look like. We're technically both. To be honest with you, we're just retracing right now. But if it blows through, then we would have been saying we're bullish ever since. And if you want to compare when you were bullish for 100 years, right? So that would push this. That would say why we're bullish, right? But it is still bullish. But we're in a. I think this is a crack sort of speak here, and I don't know. But the fourth quarter is panning out as being bullish. So we're just gonna still flow with the counter trend. But if we're bearish, I'm gonna say that we're gonna do this too. Okay, so you have again 2 reasons to buy, is what I was saying yesterday. Actually, I said you had 2 reasons to buy: retrace down here, and then coming back up for that high. So I think they're gonna really get to this level. But to be honest with you, this is a 61 right there. It's a nice place to sell, man. I mean, it's because of that monthly right there. It's not sealed, and I'm not saying it has to, but hopefully this is not a carrot that gets dangled to me. But you know, it has all right to sell from here. To be honest with you, where it already came from, you know. So, and then if it was bearish and it didn't break that high, then obviously I would look at something like this. You know, it's just literally just going to be doing this. So that's what I got for you here. I hope this helps. You guys take care until tomorrow. God bless.